recording. And Sparrow, can you see my screen?
Yeah, I can see your screen now.
All right.
Can you hear me clearly?
Yeah, I can. So let's proceed. Now, what is liquidity? Okay, liquidity is money. Okay, liquidity is money. And what is money? Money is what makes the market move. Money is what moves. Okay, money is what moves the market. Liquidity is money. Money is what moves the market. Now the question is, where are we getting this money from? This money does not fall from heaven to the market. It doesn't belong to the government. Like Nigeria government doesn't just like pump the money into the forex market. No, this money belongs to you and I. There is a saying that if you cannot spot the liquidity, that is, if you cannot spot the money, it means that you are the money. They say it this way: if you cannot spot the liquidity, then you are the liquidity. In other words, if you cannot spot where the money is to take the money, it means that you are going to be the money for other people to take. Now we have three major types of liquidity. Three major types liquidity, in short form LQ, of liquidity. Now every other liquidity is situated inside these three major types of liquidity. Pay attention. Now the first one we have inducement liquidity, which could also be written as IDM or ILQ. Two, transactional liquidity, which could be written as TLQ in short form. Then the last one we have structural liquidity, which could be written in short form SLQ. The three major types of liquidity. Every other liquidity is under these three major types of liquidity. We have the inducement liquidity, the transactional liquidity, and the structural liquidity. Now, before now, we have done few instances of the inducement liquidity. That brings us back to when I said that liquidity is money. Now, if you remember before, I said inducement liquidity is trap. I don't know if you can remember, which means that what? It is trap for early traders, people that want to buy early or people that want to sell early. Now, if a trade is like this and we have inducement liquidity is majorly like the lower time frame. Now, this is the most recent internal break of structure. Now, this whole leg becomes an inducement liquidity. This whole leg becomes a trap. No matter what you are doing, no matter your strategy, avoid trading this leg. Like, trading it, I mean, is avoid your entry to be at this point. At this point here, whatever you are doing, even if you see the best entry model here, avoid trading directly like this, except price has engineered liquidity before this liquidity. But that is when we get into entry models. We'll talk about how price can engineer liquidity at our inducement to give us another trap before this. But for now, you are not expected to buy or sell just at the point of the inducement liquidity, because the inducement liquidity is known for trapping early buyers or sellers. The inducement liquidity is known for trapping early buyers or sellers, and the inducement liquidity is the most recent break of structure internally. When we're talking about most recent, when you are drawing your internal break of structure, the last one that you draw and then you drop your pen that there is no more internal break of structure, that particular one is called an inducement. Even if price is at this point like this and you don't know if it is going to break this high or break this low, the inducement you have is this one. This thing is not an inducement. Some people take this as an inducement. It is wrong. This is not an inducement. So let's proceed. That is for inducement liquidity. I'm going to do the template for the three of them before I go into the chart to show examples of the three of them. So as simple as this, I'm not stressing so much on inducement because we have already talked about inducement liquidity before now, because we used it to identify the advanced market structure formation. So let's proceed to transactional liquidity. Now, when you hear the word transaction, what comes into your mind should be a process of things that are like moving, a transaction from this person to this person. That should be what should come into your mind. When you talk about a transaction is not for just one person. Transaction has to do with two or more persons. Have a transaction with Sparrow, it means that it is two or more persons. That is where transaction comes about. Now, if we have transactional liquidity, what does transactional liquidity mean? Transactional liquidity is simply the liquidity that is in charge of clearing previous strong points. Number one, in charge of creating reversals for continuation. Number three, it is in charge of creating flip zones. All right. How does this transactional liquidity look like? I think that thing just went out. So okay, it's here. Now, how does the transactional liquidity look like? Now let's get a diagram, like a template of how it looks like. Yet again, Now let's say we have series of externals. Transactional liquidity is not like the internal liquidity. Internal liquidity has to do with lower time frame. Transactional liquidity has to do with higher time frame. Okay. So this is our 4-hour time frame external. For those asking, where do we start drawing the external from? Do we just start randomly? We will go into that when we get into range. Okay, but for now, we won't talk about that. The next class, not the morning class coming to the evening class, we'll get into range and then we'll talk about that. I think that's tomorrow. Okay, so these are our 4 hours time frame. And all of these are strong lows. Am I correct? And then if you remember, I said something like, if this particular strong low don't have 3 or more internals, but a new strong low, that's an external, a new external got formed, and in that new external, price created 3 or more internals. It means that this external over here is the valid external and this one is not valid. But should we bother? No. You can still draw it as your external regardless of the fact that it is not valid, because it does not matter. Why? Because of the transactional liquidity rule. Now, every of these external once had powers in them, like full powers. But after the whole the rules of the transactional liquidity that states that, write it in your notebook. The rule of transactional liquidity states that once there is a valid change of character on a particular trend, highlight the word valid. Once there is a valid change of character, what is a change of character? Price taking out the external. Stop calling disruption change of character. Price taking out the external in the higher time frame. So once there is a valid change of character, price tends to use previous external. Price uses previous external as transactional liquidity. Once there is a valid change of character, price uses previous external as transactional liquidity. Price uses previous external as transactional liquidity. Okay, so if price uses previous external as transactional liquidity, what next will happen? I said it in the rules of the qualifications of a transactional liquidity, like what they do. I said that they are in charge of causing reversals. How do I mean? Now, despite at this point we will use as transactional liquidity, they have little, because they were the valid demand zone before. Valid demand zone, that's to buy, a zone to buy where orders for buy are kept. Okay, so they were the valid demand zone before. Despite that they have turned to liquidity, they still have little orders that are kept there that price will sweep. Now, price will do like this, come to them after this is a change of character. Price will take out this point. It is in charge of reversal. Reversal is like this. Comes here, reverses. Reversal for a continuation. That's why I said it is in charge of creating reversals for continuation. I can't understand. You are not seeing my screen. Sparrow, can't you see my screen?
Sorry, your audio is really breaking. I don't know if it's just from my end.
Some people are saying nothing is wrong and some say something is wrong. It's just from your end. It's very clear. Everything is going smoothly. It's clear. It's very much clear. Nothing is bad. Everything is okay from your
Alright.
end. Okay, let's
Alright, you
proceed.
can continue. Thank
Whoever
you.
is having an issue with probably the audio or something, sorry, just have to watch the recorded video. It is your own personal your personal network issue. Sorry about that. Sorry about that. Let's proceed. You are a little bit too fast. The last time I was talking small, people say the class is dull. Now I just talk normal. You say it's fast. Okay, let's proceed. So yeah, these are valid externals. Okay, they were valid not until the rule of order flow. You have to keep following the market as it is moving. New external makes the previous external invalid. That's just the rule of order flow. New two break of structure internally makes the previous one invalid. It doesn't matter, whatever. So let's proceed. Please try to fix your network, okay? And just try to fix your network. But it's going to show clearly in the recorded video. Really sorry about that. Okay, so let's proceed. Now, I was talking about the transactional liquidity, and I said that once this new external is created, the other ones becomes invalid. But it's not like they are useless because they are invalid. No, they are not useless. Now, what is their use? It becomes transactional liquidity, which is the liquidity in charge of causing reversal for a continuation. Once it's a change of character, it is now a downtrend, no more an uptrend. So this transactional liquidity is in charge of causing what. That's why I see that some blind people are they literally blind, not like they are not seeing. Okay, like literally academically, maybe trading terms, blind, that kind of blind. So like some blind people, let's say they do not understand, they take trades from this point. Now they are taking trades on very low demand. Why? Because there is a change of character already. So trading at this point is trading at transactional liquidity. You are trading a reversal. It's not like the major move, because the major move is selling. Because why? We have a change of character. So if you are trying to buy from here, it means that you are buying a reversal for a continuation of a sell, because the transactional liquidity is in charge of what? Creating this is in charge of creating this reversal for a continuation to the downside. It is what gives us this move that goes up and then comes down to continue. Okay, now you might be wondering where is he doing all these things to? Like, if he keeps selling and selling, just like the internals, that if it takes out two internals, it gives us a disruption and it begins to sell till the external, then it may probably buy from the external. This one is quite different. If there's a change of character, it takes out transactional liquidity till the range. But we won't be talking about the range today. The next class, we'll be talking about the range in the next class. So this transactional liquidity is in charge of this. And I said again, it is in charge of flip zones. We're talking about flip zones when we get into entry. It's an entry model. There are a lot of entry models I'll be teaching you. Okay, so flip zone is one of them, and it is like transactional liquidity also causes it. Internals, which is internals also causes flip zones. We won't be getting into that for now because that's not the topic. But just know that these are the few use of the transactional liquidity. They are the ones in charge of all of this. Market will clear them. Once one guy is taken, means that the rest of them are no more safe. So let us proceed to the third one, which is the structural liquidity. Now, some persons were asking the okay some people were asking that what are those little break of structure that they see inside their internal. So, and I said that I'm going to talk about it in the next class. Okay, so the little break of structure that you see is called a structural liquidity. What is a structural liquidity? A structural liquidity are simply minor break of structures found inside an internal liquidity. A structural liquidity, they are the minor break of structure found inside the internal liquidity. Now, what do I mean? And also, I'm going to like give um a proper qualification, like what qualifies an internal liquidity. Before I gave the one for the external, and I said for the external, on probability it has to take out an internal liquidity or even an external itself, or it has to compulsorily create 3 or more internals inside of it. And then I said for the structural liquidity, for the internal liquidity, I'm going to explain it when the class goes on. So that's what I'm going to say now. Now, the qualification for an internal, make sure you're writing so you don't have to ask the same question again. The qualification for a valid internal, not compulsory, but it has to sweep structural liquidity, sweep of SLQ, and create. This one don't have how many SLQ it has to create, but you just have to create SLQ inside of it. It has to sweep and create SLQ. SLQ, that's structural liquidity. Now, what is this structural liquidity? They are simply the minor break of structure you find inside your internal. So it means that if an internal does not have a structural liquidity, it is simply a structural liquidity, because a structural liquidity does not have a structural liquidity inside itself. If it has a structural liquidity inside itself, then it is an internal. Okay, an internal liquidity will sweep a structural liquidity most time, majority of time, and create a structural liquidity inside of it. If it doesn't create a structural liquidity inside of it, then it is not an internal. What do I mean? Now, the word of sweeping structural liquidity, let us say that this is let me take this off. I'll just maybe like shift it. Okay. So this is just like internals, and these are just like minor structural liquidities found inside here, as many as they can be before the break of structure. And now a new internal wants to be formed. On probability, it has to sweep one or more structural liquidity, but compulsorily it has to create its own structural liquidity. When this happens, this leg becomes an inducement and this leg becomes a disruption. If the movement is like this, let's just say that there's structural liquidity here before the break of structure, it just like moves like this and moves like this. This is not an inducement. This is simply just a structural liquidity that is found inside the inducement. This is how it will be. It's just a structural liquidity that price created probably to engineer this zone. It is not an inducement, because an inducement has to create structural liquidity. Now we'll be starting from the down to the top, starting from explaining, like showing the diagram of the structural liquidity, the chart, before we go to transactional liquidity, and then we go to inducement, and that will be all for today. So now let's check what I mean by that. Okay, now let's use this guy as example. Now this guy took out a structural liquidity. Remember I said if it doesn't have what's the name, if it doesn't have the structural liquidity inside of it, then it is not an inducement. This thing does not have a structural liquidity here inside of it. Structural liquidity, okay, can be in two forms. Before I forget, we have the one that it is too many candles just moving, and then just like break structure by themselves. Like they move too many candles, like movement like this. Those ones here that moves like this, and then they break structure by themselves inside the inducement. And we have the second one that comes with the candle sweep. It is called candle sweep or sweep of candle, anyone. That one is made up of 2 or 3 candles. It's just like we have the one that is just there, and the one that another candle just angrily closed below it. And since an uptrend, compulsorily the next one have to close above it. So this one is made up of 3. If this is 1 hour time frame, you see this type of structural liquidity, it means that in the lower time frame, like maybe like 1 hour, if this is like 1 hour time frame, in the 5-minute time frame, this thing you see that you just saw here, now that is like 3, will be showing like 5, 10 in the lower time frame. Why? Because this is the higher time frame, it is showing 3, but it's definitely going to show like this. It's going to show like, I'll give an example of it, don't worry. It's definitely going to show like this, but on the higher time frame, it's just like going to show like 3. Yeah, like 3. Okay, so we have this type. You can see like this on the 1 hour, and you can also see like this on the 1 hour. But if you go to lower time frame, you can see like even this one that is like this on the 1 hour, if you go to like 3 hours, 4 hours, it's going to show like 3 candle, or just one that it is the week that went below another one. Just simple. I will give examples. Let us proceed. So now, how did we know that this point is an inducement? For those that were arguing about gold, I saw most of your chats arguing about gold, that it bought here, this one and that one. Now I told you, entering daily for, imagine this is an inducement that was created here. This is an inducement. This is a structural liquidity that was taken out by the market. Why is this thing a structural liquidity? Because it did not create the one of creating structural liquidity inside of it. It is non-negotiable. Okay, it is not negotiable. So it did not create structural liquidity inside of it. It's like just it's just there. And for one thing, it is also involved in this breaker structure. The most important reason why it did not even hold. As a matter of fact, to shock you, this year is a structural liquidity. It's just like an engineered liquidity to this disruption. Why? This one is a bit different from the other reason. This one I told the people before is because this thing could not take out this one. As me, this one broke the structure, broke this high, then this would have been another leg on its own because it actually broke this person here. This is a structural liquidity, and then it created structural liquidity inside of it. So this is like an example of the one of too many candles movement. This one here, then this one here, this red one here is an example of the one of this can happen in 3 candles, which is this one here. So it's like close below this one, which is this example I gave here, close below this one, and the next one close above it. Now let's do like an instance to tell you what I meant by if you go to the lower time frame, you'll see that this thing that like 3 here will be so many candles in the lower time frame. Let me put a box around it so that you will know, so you don't know, you don't think I'm lying or something. So let's go to the 5-minute time frame to check out for this particular candle I put box. All right, good. Now can you see it? Now in that time frame it was just 3 candles that did that movement, but now how many candles this year? A lot of candles, almost like 10, and the movement was like this. But if you go to the 1 hour now, it is showing like 3. It is made up of 3. Let's go to it. Of course, look at it. It's made up of 3. So this one is another pattern of structural liquidity. It could be with a candle sweep pattern, or it could be like this one here that is like this. Okay, this one on its own just walk came below here, and on its own it kept moving and structure that is this type. Then this one is this one. So whether it is creating this one or it's creating this one, an internal should compulsorily have a structural liquidity inside of it. Now this one that everybody bought from, lucky for them, had this type of structural liquidity. This one, this is it. If I should highlight it again, if you go to the 5-minute, it's still going to show like too many candles. Let's go and check it out. Where is that guy? Okay, this is him. Okay, so let's go to the 5-minute to check him out. Okay, exactly. Now you can see it yourself. Okay, so you can see now that it is now giving that too many candles pattern. Look at it. So you can see the structural liquidity is there. So whether it is giving you the one of 3 candles or it's giving you one of too many candles, let your internal compulsorily have a structural liquidity, and for a better win rate of that zone you want to buy from, it should sweep a structural liquidity, just as your external has to sweep an internal. And that aside, an internal can also sweep an internal. Like it can also take out an internal like this and later come out like this. If this happens, it doesn't change the fact that, let me take this off. It doesn't change the fact that this guy is still the internal. This one is not the internal anymore because this guy, to validate itself, it swept an internal itself. Like it swept, let me just use the word, it swept his brother. Okay, it swept his brother and created structural liquidity. So structural liquidity is non-negotiable. Okay, some things that are non-negotiable when you're trading this pattern is trading directly at the inducement is a red flag. Okay, that particular rule is non-negotiable. You do not have to trade directly from the inducement. Buying at transactional liquidity is a red flag. It is, that rule is non-negotiable. You don't have to buy or sell from there. An internal has to have a structural liquidity inside of it. It is as well non-negotiable, because as you can see, their structural liquidity, their internal failed. Not like it failed, it is actually still valid, but it got taken out because even if you're buying from there, except your SL is like, where will your entry be? Here. Okay, fine. So except your SL is like here, but anything like close to this point, you have a loss. Okay, and price has not even moved anywhere. You don't have a good profit entering daily at this point. So you do not have to enter daily at the inducement. It is not negotiable. So the structural liquidity have two patterns and they validate an internal. So let's, if you cannot see or you cannot hear me, it is your network. Please try to chat on the group. If you can see, tell me you can see and you can hear me clearly. If you cannot, tell me, let me see.
I can hear you clearly, and your screen is very visible.
Then it is your the people complaining in the general discussion. I think it's your personal network. I'm so sorry about that. Okay, it's your personal network. Alright, let us proceed. Structural liquidity, for those persons that say recap structural liquidity. Structural liquidity, they are the minor break of structure that are found inside an internal. As a matter of fact, the structural liquidity validates the internal. Okay, it validates the internal. So let us proceed. So the next one we'll be checking on the chart is the transactional liquidity. I just prayed derive allows us to check it because it's the 4 hours time frame and these people have problem with allowing people go back. Okay, if you remember, I talked about the price also using an external to as a sweep, just as it can an internal can use an internal as a sweep. Like this one now, it used this external because after issuing of character, it just sold small and then it bought and that ends it started buying, use this guy and to where it is right now. Okay, so let's see if we can get oh no, we have to do the transactional liquidity when we're talking about the range, when we'll be using the normal trading view. Okay, so because we need a point where price changed character and started selling so that we can mark out all previous external and I show you how price took them out and used them for reversals and continuation. So the next one is the inducement liquidity. We have done that before. That's like the topic of every day. Inducement liquidity, the first and the most recent internal break of structure. Okay. So 5 questions. 5 questions on. See,
All right.
yeah. Sorry, before you, let me tell you. When I was learning this liquidity, let me be honest with you. I watched the if you know Toby Forex, that's my mentor. I watched the video of liquidity like more than 10 times. First of all, I was doing 4 times every day until, and I'm somebody that I have to ask him reasonable questions so that he won't stop replying me. When you ask somebody the same thing repeatedly, they might just get tired of you. So I make sure that I'm asking him new ones that I actually do not know genuinely, not the ones that is my fault that I do not understand it. And I don't like acting dumb to people. So I struggle to learn very well. Okay, so I watched the videos like 10 times. I watched it repeatedly. I was doing four. It was not going because social liquidity was my major problem. But right now, it's actually very easy. As a matter of fact, I cannot remember when I opened a book and like I'm teaching from a book. All the things I am saying is inside my own head. Okay, so it's just practice. It makes improvement, if not perfection, improvement. Today, tomorrow, next tomorrow, you had the weekend. After today and tomorrow, you have like, and the Wednesday morning class, you have like Thursday, Friday, Thursday, Friday. Okay, Thursday, you have to like study. So, with time, you cannot understand it just one time. Don't try to be so hard on yourself. Okay, but just do your own best and leave nothing for anybody. Do your best and do the rest. So let's go with 5 questions. The rest should come by 12 p.m. tomorrow. Thank you. Spiral, let's have it.
All right. Jenny, Easy, you've been unmuted. Please ask your question. Hello, Jenny. Can you hear me? 60, you've been unmuted. Please ask your question.
I think I have to rewatch the video a couple of times because structural liquidity is kind of breaking my head right now. So I have to drop.
Okay, Dan Best, you've been unmuted. Please ask your question. Dan Best, can you hear me?
I can hear you. Good evening. Can you hear me?
Yes, we can proceed.
Your question.
Okay. Please, I want to ask if the structural liquidity must come before the break or it can come after the break.
It must come inside the break, just like this one.
Okay.
Yeah, it must come inside of it. If it comes outside,
Thank you.
It's no longer valid now. It means that one is
Okay.
not an inducement. Yeah.
Thank you.
Seems like today's class was like hot. No too much question. Everybody needs to watch the
Cool.
video
You've been
again.
unmuted. Please ask your question.
Hello.
Hi.
Hello, can you hear me?
Hi, we can hear you.
Yeah, good evening and thanks for the class today. But I want to ask you, please, can you please take the structural stuff in, like, because I didn't really get it.
Okay, now I'm going to take it really, really slow this time. Now, Structural liquidity is simply the little break of structure that validates an internal, or in other words, structural liquidity are little break of structure, very little ones. They happen in two ways, with three or two candles or more candles. Now, they have the one that happens like this one you see here, and they have the one that happens like this, too many candles, and the one that happens with just three or two candles. Now, they have to be found inside this inducement before it breaks structure, because if it is like this, people trade lower time frame. Now, that structural liquidity is like their own, probably like their entry or something. I don't know how they do it. I don't trade lower time frame. I never for once like want to trade 5 minutes. The early time I was trading 5 minutes, it was really really inconsistent, so I had to like switch. So this thing here, to them, they can use this structural liquidity for like, I think their own inducement, their own disruption, and all of that. I don't really know, but this is actually what validates our internal. It can be like this or like this. It can be like this or like this. Whether it is like this in the lower time frame, it is like this. If it is like this in the higher time frame, it is like this. So this one is simply a candle that just on its own decides to go below the previous candle, and somehow no candle comes below it again. The next one just comes above it. Even if this candle decides to come below it, if the next candle comes above it, it doesn't matter. This is still a structural liquidity. The whole idea is let one candle just be below another candle and another candle comes above it. It should not just be straight candles that are moving like this, another one move like this, another one move like this. It should not be that kind of candle. Do you understand? It should not be like this type of candle. Like this one is a structural liquidity. It should not be this type. This is structural liquidity. So the structural liquidity should be found inside an inducement, and because this structural liquidity now, structural liquidity cannot create structural liquidity inside itself. So this thing you are seeing here now is a structural liquidity. It just swept this one, it closed below this one, and it kept going up and up and up. It did not create any structural liquidity inside itself. So because it did not create any structural liquidity inside itself, this one just becomes what? A structural liquidity. So for an internal to be an internal, it has to create a structural liquidity inside of it. And if as good as it turns, it has to also sweep a structural liquidity, just as an external will sweep an internal. Okay, do you understand?
All right, yes, thank you. I'll rewatch the video too. So yeah, thank you.
You're welcome.
All right, Code Breed, you've been unmuted. Please ask your question. For Code Breed, you've been unmuted.
Cold breed.
Mo, you've been unmuted. Please ask your question.
Hello, can I go?
question.
Okay, good evening, SABIIGAL. So I have two questions on SLQ. Is it compulsory for an SLQ to be in a A shape or V shape? Like for example, let's say we range now
A
and you
shape.
spot the SLQ. Is it compulsory for you to be like a V shape or
A shape, like this. Is this what you call A shape?
Yes.
Is it compulsory for it to be like this? Let me ask you a question. Is this an A shape? Like, I don't know what is being called A shape.
I'm just trying to,
No, I can also learn
but
from you.
like a triangle.
Maybe like if people have a name for this. Is this an A shape?
Yeah, that's what I mean by an A shape. Yes.
Okay. Okay, then it means that it can be in an A shape. Then this is a V shape, yeah? This one is a V shape.
Yes.
Okay, it means that yeah, it can be in both an A shape and a V shape. Is that okay?
Okay. Then my second question is if the SLQ is above 50% on the premium or discount level,
Above,
is it still valid?
there's nothing like 50% something in SLQ. SLQ should just be scattered everywhere. It doesn't matter where it is found. It should just be inside this guy here. It should just be inside this internal. That's just what we want, because you are not even like entering this from the inducement despite there's a structural liquidity there. But the only importance of this thing sometimes is because the structural liquidity can give you another entry just after your initial entry. I'll explain that when we get to entry. Like this one now, there's what price will do here. Let me take this out. In this, because this is a structural liquidity. So let's say like, because this is a disruption, but there is nothing in this life that will make me enter directly from this point. There's nothing. So if I want to enter here, I can either enter when this guy is taken out, even if I want to buy, or I sell when this guy is taken out. Then I could possibly get another entry when price are taking this guy out and come above here. I can get my entry here, and I can also get my entry here. So basically,
Okay.
yeah, I don't know if you understand me.
I understand. Yeah, I understand that.
Okay.
Thank you very much.
You're welcome. Sparrow. Can you all hear me? Is Sparrow there? Can you hear me? Please talk in the telephone.
Okay, this is the last question.
Okay.
Arole, I don't know if I'm pronouncing that correctly. You've been unmuted.
Okay.
You say?
Actually, I'll just have to rewatch the video again.
Somebody said
My
is there.
can you hear me?
Yeah, I can hear you, no problem. Somebody said, is there a particular time frame for structural liquidity?
Just about the structural
Somebody said, is there a particular time frame for? Please mute yourself. This are rolling. Somebody said, is there a particular time frame for structural liquidity? There is no particular time frame for it. Why? Because it is that time frame where you are marking your internals. That is where you have to see it now. Will you go to another time frame to look for something that is supposed to validate your internal? No. As I was checking this code now, did I leave this place? You will see it here. It will show. It will show. You will see with your eyes. You don't have to leave this place. This is what is validating your entry. So why do you have to leave here to know something that is supposed to validate your entry? There's no time frame for it. It is that time frame you are marking your internals from. Sparrow, is that like the last question?
Good evening, it's Spyro. Can you hear me?
There's hold on, please. You said 5 questions, so that was like the 5. But there's still more hands up if you want to take more questions. More
What
questions.
example do you people need again? I actually like explain this. I've said it before. You cannot. People have different ways to understand something. Okay, this is like the first time you are coming across this thing, maybe. So it is totally fine and alright if you cannot understand it at the spot. Okay, I can show you more than 100. Okay, let me just be showing you. This is the structural liquidity, the 3 candles format. This is the structural liquidity, the 3 or more candles format. This is an inducement. This is not a structural liquidity. This is an inducement. Why? There was a sweep of structural liquidity and it created, first of all, the 3 candle format of the structural liquidity, the 3 or more format of the structural liquidity, the 3 candle format. This is an internal. This one is an internal. Took out a structural liquidity, created a structural liquidity. This is an internal. This is an internal. This is structural liquidity. I can show you more than 100 in this chart. It's not even hard. This is an internal. It swept the structural liquidity and it created its own structural liquidity, the 3 candle format. This is an internal. It swept the structural liquidity and it created its own structural liquidity, the 3 or more format. As you can see, as I'm drawing it, that is just how it is. I can show you so many. This one is structural liquidity. It swept the structural liquidity, the 3 candle format, and it created what? A structural liquidity inside of it. Simple. You just have to calm down, okay? There are a lot of distance everywhere. I don't even have to leave this time frame. You don't have to leave the time frame where you are marking your internals. And you need more illustration. This is the only illustration you can get directly from the chart. If I should draw it in diagram, this is not how it's going to look in the chart. And the other time I was drawing so many diagrams, it will tell you people that I was complaining I should do most of it in the chat. I did it in the chat and you're complaining that you want most of it in diagram. What should I do? So I think this is where we are going to end the class. Ma, what do you mean the SAQ should be found inside the inducement? This is what I mean. Let me use the other one star. Let me use this one. So this is what I mean. Okay. Now these are social liquidity. They should be found inside this inducement. This is an inducement here. This thing is an inducement. As you can see, the structural liquidities were found inside of that. If you don't know how to draw an inducement, this structural liquidity is supposed to make it easy for you, because all you have to do is just check in the chart any point where don't have, maybe for example they did not sweep, they did not like take out another candle from this angle here. That one self can be like negotiable, but then they don't have inside of it, they don't have candles that one comes below another candle, or the one that so many candles just break structure inside of it. They don't have things like that. This thing will make the internal very easy for you to spot, because if you cannot even identify structural liquidity, marking out the internal liquidity will be difficult for you. So for those that were having problem with marking out internals, the structural liquidity should make it easy for you. The structural liquidity is easy to spot if you pay attention to details. These candles are the details you have to pay attention to. So that person that was asking, simply like this, they should be found inside the internal. If your internal leg is like this, inside of it, your social liquidity should be inside of it. As simple as that. I'm just checking, like, I wish you can take a plain chart and mark out social liquidity in 2 or 3 internals.
Wait, sorry. Do you still want to take questions? Because there's a lot of
like,
hands still
nah,
raised.
I'm actually like reading it from the ones they are writing. I'm like reading it. The rest questions should come as 12 p.m. questions. I'm like reading it. The person said, I should draw it in a plain chart, mark out 3 or 2 social liquidity. I just did that now. Shey all these ones were empty before. I was the one that drew it to this point. I have done that. What's your name? Imanari. Okay. Is there a number of SLQ that validates an internal liquidity? No. It can be 1 or more, but there should be. In this sense, I saying social liquidity is like 3 or 5 candle BOS. What does that mean? It can come. I just said that it can come in 3 candles now. Even 2. I gave 2 ways it can come. The one of like 3 like this, or 2, you just need just 1 candle to go below a previous candle, whether wick or body, and the next one should go above it. As simple as that. Or the next one that has to be like, the second type is just too many candles working on their own, and then they like broke structure. I gave the examples of that, of the 2. Give the examples of the 2. This one, let me take out this particular place now. Pay attention to this point. I'll be showing this one have the 2 type. For those looking for plain charts, here you go. It swept this stock. This is a social liquidity. This one is the more candles pattern. Okay, you see that those things I'm calling social liquidity, they never for once have another social liquidity inside of them. They do not have it. Okay, so it swept the structural liquidity. First way to validate, and then secondly, that person looking for plain chart. Hope you are not typing, you are looking at what I'm doing. Then sorry. Then it's created this one. This one is the more candles pattern. This one created this one, and it also created the one with the 3 candles pattern. Close below this one, the next one closed above it. So it had this, and it swept this, and all these things together made up what? Your internal break of structure. So we have to stop here. Before you ask a lot of questions, make time to watch the video 1 or 2 times. Okay. The SLQ, can it be described as last push before the BOS? People have names for everything. Last push. I don't know what that means. So you keep saying internal liquidity. Does that mean internal structure? Yes. Kindly label it. And the question, why everybody like we did not talk about transactional liquidity? Nobody is asking like detail. Okay, I think we did not like show it in the chat. That's why. In creation of transactional liquidity cases where price trades from down the external without reversal. Does it say something about the external? Though I will explain that one when we talk about range. Where are most entries taken? At the sweep of an SLQ or at the sweep of an inducement? Entries can be taken at the both of them, but the inducement have to be taken out first before you consider taking entry from the SLK. We'll get to that, don't worry. So we have to video should end, it's going to be too long. Okay, we have to stop here. See y'all. Oh, you have been showing us instances of SLQ on 4 hours time frame. Ah, my god, whether it is 4 hours, whether it is 1 hour, you are okay. Let me go to 1 hour. It's still the same thing. It is still the same thing. It's still the same thing. This thing I showed you now, me, I can mark out my external from 1 hour time frame, like I can, and it's like I can mark out 4 hours external from 1 hour time frame. That is how I am. I can mark it out. You see that it did not change. It is still the same thing. The SLQ they had here is the one of the 2-3 candles pattern, so it did not change. The same thing, the same thing. See, the same thing, the same thing with time. Okay, so see you on the next class. You give me some minutes to compress the video for a lower megabyte for you. Take care and have a lovely week ahead.